Hey there, welcome. We've been doing this for a while now, so hopefully you already know what we're doing. But if you don't, we are doing a book club from my book, From Debtor to Better, The Details of Debt and How to Get Out. We're working through each of the chapters, we're working through each of the sections, and I'm trying to make sure that you have a good idea of what's going on and how to get your financial life in order, because Debt-Free 2019 is one of the things that we set as a goal for us as a family to share with you, because we've been debt-free for a while, and it's just something we want to help with your growth. So today, even before we get into the idea of getting out of debt, even before we get into some of the other detailed subjects, because we've worked through the idea of a budget, that's where we've been the past few videos, and then the last one was on relationships and money. Today, we are going to talk about insurance. Why? Because a good financial plan needs to have a few safety nets. And so before we dive into the getting out of debt and really focusing on the things that I will teach you on that, we need to understand that insurance needs to be a part of your plan. Now, a few caveats, okay? Oh, actually, before I get into that, homework from last video, which I did with Stacy over the weekend, was have a date night and to talk through money, to talk through what you dream about with your finances and what you're afraid of with your finances. And remember, the only rules I gave were be sure you have the focused time to dream together and to not poo-poo on the other person's dream, because really they need to know that that's a safe place for you and your spouse to communicate about money. Now, insurance. A couple of things that I need to tell you before we even really get started is, first off, there are lots of opinions on this, and this happens to be mine, okay? You need to decide this stuff for yourself, but this is my opinion based on all the things that I've learned, the people I've counseled, and the stuff that I've experienced in my own life, okay? So there's sort of my background for this. I am not a licensed insurance practitioner. I don't sell insurance. I don't have any dog in that race other than to see you succeed financially. So when I'm talking about this, I gain no monetary benefit if you do or don't buy insurance, okay? So please don't say that Barry told me I had to do it this way if it goes right or if it goes wrong. I am not a licensed practitioner. I'm not a licensed expert in insurance at all, okay? I want to put that out there. The other thing I want to say is that we're not going to talk about auto insurance here, because auto insurance is required in most states, and follow your state law. I mean, don't break the law here. If it says you have to have car insurance, which is a good idea anyway. But anyway, so I wanted to put those things out there before we dive in, but I'm going to focus on three types of insurance in my discussion today, okay? We've got three. We got life insurance, we got health insurance, and we got disability insurance. Those are the three biggies. So I'm going to try to make this very brief. This is a very high-level overview. And remember, look at the title, Insurance, the Bare Minimums. This is the stuff that you've got to have no matter what. Not the, oh, this might be a good option. This is the bare minimums. So keep that in mind and understand that this is an overview. All right? If you have questions as we go, then reach out to me and I'll see if I can help you a little bit more. So let's just dive in. Let's just jump into it. With the exciting topic of life insurance, let me give you the most exciting news of all. You're going to die. Okay? It's inevitable. Unless the Lord returns beforehand, you're going to die. I'm sorry, that's just the way it is. There's your dose of reality for the day. Happy day to us all. You're going to die. And guess what? Everybody else is too. All the people you love, all the people you hate, that's just the fate that we have, is we're eventually going to pass on from this life. And when we're done, we're probably going to leave some people behind, and that's really the purpose of having life insurance. Now, does everybody need life insurance? The answer is no. You know, you don't. It costs money to die, and it costs money to be buried, and so, of course, maybe you need some funds to cover that. We'll talk about that in a second, but you don't necessarily need life insurance. So let's talk about some of those qualifiers. So I've already mentioned, when you die, when, not if, but when you die, yeah, it's going to cost some money to bury you, for a funeral if there is one, and all that kind of stuff. It's going to have some expense associated with it. So some people say you need a life insurance just for your burial. I don't necessarily agree with that. It would be a wonderful thing if you've set aside some money in a savings account or something that would cover the cost of your funeral and burial. I do believe you should pre-plan your funeral and burial, but I don't think you should prepay it. So there's some money that needs to be set aside if you're trying to take care of your family and love on them while you're here before you pass on. Then sure, okay, set aside some money from that. But having an insurance plan for it, I don't generally think is necessary, provided you can set aside some money there. Or if your family's well-to-do and it's not an issue, then okay, let's not get hung up. The point is, why do we need life insurance? Why do we need life insurance? Well, let me give you a couple of decision-making things here. Number one, the purpose of life insurance is to replace needed income. Understand that's its only purpose. It is not so that, somebody can become a bajillionaire when you die. It's not so that, the emotional blah, blah, blah can be fulfilled. Insurance is an emotional thing. People get really, really upset when you start talking about insurance because they make it this emotional thing. The most valuable thing I can tell you here is be factual, be realistic, and drop the emotion, okay? You're going to die, and people will be left behind that will be sad. Okay, let's go ahead and get that out of the way. With that said, do you need life insurance? Well, the question to ask is, do you have an income that needs to be replaced? So let me give you some examples. My mom is retired. My dad is already passed on. All of her kids are grown, and all of us have decent jobs and all this other kind of stuff. So she has an income right now. She has a retirement plan. She has some Social Security. She has those kinds of things. But guess what? When she dies, nobody needs that income because the income is providing for her. It's not providing for anyone else. Let's take a different example. Me, Stacy, and I have 4 kids. I work. We have a full-time income from me. We have the health insurance that's provided through my work. We have short-term disability provided through my work, all those other kinds of things. So if I pass away, then my income, it would be a really nice thing to have that for Stacy, all right? So do I need life insurance? The answer is yes, I need life insurance because the income that I would no longer be able to bring into that household is not just for my benefit, it is for the benefit of Stacy and our 4 kids. We tracking? I hope that makes sense. Keeping it simple. So it costs money to die. It costs money for you to, need to be buried, but that's not the purpose of life insurance. Life insurance is, does somebody need my income when I'm gone and can't give them that income anymore? So that sort of gives you the general idea. So how much is the obvious question? Most people will agree that are financial experts will agree that you're aiming to get about 10 times the amount of your annual salary as a good life insurance policy. We'll talk about what kind in a minute. About 10 times. So let's say you make $50,000 a year. That's a $500,000 insurance policy. 50 times 10. You make $100,000 a year. That's $1 million insurance policy because 100,000 times 10. Now you say, well, why do you need so much? Well, in simplest terms, the goal is to live off the interest. The goal is to put that money into the market and not have to touch much of it each year, much of that principal, so that you can earn and allow people to live off of the money that is earning in the stock market or the bonds or wherever it happens to be put. There's all kinds of argument there too. Again, we're not trying to get into the weeds. The point is you need to have a big enough amount of money that you can start to live off of the income that large sum generates, just like you would from a retirement plan. Okay? So 10 times the amount. So the other thing that we have to worry about or consider is as you get older, then you hopefully have less and less need for life insurance because you have a larger nest egg that is growing. And so if you pass away, then that nest egg can provide for the ones that you leave behind instead of needing a life insurance policy. So that takes me to sort of the idea of what kind of insurance. I'm a big fan of level term life insurance. Now, there's all kinds of options out there, and some of it gets really confusing. There's whole life, there's variable life, there's universal life, and all those kinds of permanent insurance as they're known, because the point of those plans is to always provide an insurance for you. Whereas term life says, okay, I'm going to buy this much coverage for this many years, and then I'm done. So let me give you an example. I'm currently 38 years old, and if I buy a 10-year term life insurance policy, then it's going to cover me if I die between now for the next 10 years or until I turn 48. That's all it means. So if you say I'm going to buy a 20-year term policy, a 20-year level term policy, then it says that anytime between today and 20 years from today, if I die, then that policy pays out. That's it. Whereas a permanent policy, a whole life variable universal, they're going to have all these little fancy things and these, money that it earns on the side. They're usually much more expensive. It is life insurance, but it's usually a very expensive way to get it. So I really like level term insurance. 20 years term is good for somebody generally in my age range, but you've got to look at your personal situation and say, how many more years do we rely on my income? Is it until I'm 65? Is it until I'm 75? Is it until I'm 50 because I'm going to retire early? Is it until I'm 40 because I'm going to retire really early? It depends on your situation. But term life, 10 times the amount of your annual salary, and only if you need to replace your income for the people that you leave behind. All right, does that make sense? Now, there's tons of extra stuff there. I go over a little bit more of that in my book, but then additionally, there's all kinds of books that have been written just specifically about that topic. Please feel free to dig in as deeply as you want, but understand you probably need life insurance if you have someone that needs the income when you pass away. Okay, let's move on to type 2 so we can be interested in the time of your day and not just all this content. Health insurance. The number one reason that people go bankrupt in America is unexpected medical bills. Okay, people get sick. I can't help if I got sick. I can't help that. You can't help that. It happens. I can live the best lifestyle possible, take all the supplements I want, do all the right things, and I still may get ill. But guess what? That doesn't mean that I want to go broke too. So just like I feel like you absolutely have to have life insurance if your income is needed, I feel like you need health insurance. And I think everybody needs health insurance because you basically want to make sure you don't go broke if you get sick. Now, that doesn't mean that I feel like you need to have this big fancy Cadillac policy that covers everything under the sun. So again, here are my rules for bare minimum coverage. Just like I said, this is insurance, the bare minimums. First off, it needs to be major medical, meaning if I go in the hospital and I'm there for a month and my medical bill is $1 million, do I have $1 million to pay that? Probably not. Major medical coverage. That doesn't mean that if I get the flu that it covers for me to go get, in-home care by a nursemaid who's going to, do all the things that I need for my kids and then also take care of me on the side and blah, blah, blah. No, that's silly. I'm not looking for that kind of care. I need someone to care for me if I'm really sick and dying in the hospital kind of scenario. So major medical. 2, a deductible that basically kicks in before my emergency fund is gone. So let's say that I have a $10,000 emergency fund. Well, I don't want a $20,000 deductible because I'm going to run out of emergency fund before I get into my insurance where it will really pay out well. I may want a $5,000 deductible. So think about that. Think about your emergency fund versus your deductible and make sure your emergency fund is larger than your deductible. Okay. 3rd, the out-of-pocket maximum. So if you look at an insurance plan like the summary of it, it will say, okay, well, here's your deductible, here's your out-of-pocket maximum, here's your family this, and it gives all these details. So these words may or may not mean a lot to you, but as you look at insurance plans, they will, okay? So a max out-of-pocket or an out-of-pocket maximum that won't break you. Okay, if your emergency fund is $10,000, if your deductible is $5,000, then okay, that leaves you $5,000 until you're broke, right? If you can't work, that is. So you probably don't want an out-of-pocket maximum of more than 10, and you probably want to keep it no more than like 7,500. I mean, use some logic and common sense here. But again, a deductible that kicks in, a major medical coverage, a deductible that kicks in before you basically have an emergency fund that's gone, and then your out-of-pocket maximum that is not going to break you. The last piece is no annual or lifetime maximum. Okay. Now you may have one of these situations where you have cancer. I mean, we don't want that, but I know plenty of people who have had cancer and didn't plan for it, but they had medical bills that were in the millions of dollars, and yet they had an insurance policy with a lifetime maximum benefit of $1 million. Well, guess what? At the end of that $1 million, your insurance coverage is gone. And now what? You've got millions of dollars in medical bills, so you're bankrupt. So look for a plan that has no maximum annual or lifetime out-of-pocket, or excuse me, coverage out-of-pocket. You definitely want a maximum on the out-of-pocket, but no lifetime or annual coverage cap, okay? And then the other question that people ask me sometimes is about prescriptions. Do you need prescription coverage? If you can get it and it's reasonably priced, then probably yes. But generally speaking, most people who are taking prescriptions, there's all kinds of discount programs out there. So if yours doesn't cover prescriptions, and that's one of those, it depends on your scenario. We take absolutely 0 prescriptions. No one in my family requires a prescription, and that is a huge blessing. So occasionally, if we have to go get a prescription filled and we had to pay more for it, it wouldn't be the end of the world. But if you're on a bunch of them, then absolutely you want some assistance there. Keep in mind the purpose of insurance. It's to keep you, in the case of health insurance, from going broke when you get sick. So keep that in mind, all right? Moving on to the last one, long-term disability. All right, so this one's sort of in line with your health insurance. You need it, all right? You need something that will cover, I can't work, and that means I'm not going to earn an income. So health insurance makes sure your medical bills get paid, but long-term disability makes sure that you can have food on the table. It makes sure that you aren't going broke while you're laying in bed sick, okay? So let's talk about that. Short-term disability is often something that employers will provide. It is the, you can't work for 60 days or, whatever, a very short period of time. And that usually can also be covered by an emergency fund if we've got one, and hopefully we do. And the long-term disability is a situation where it's a really, really long period of time, months and months or years and years, that I'm unable to work. That's when those policies kick in. That's why they don't usually cost a whole lot of money. And we'll talk about some details there. Again, let's talk bare minimums. So when it comes to that short-term disability, we're not going to cover that. We're talking long-term disability. Long-term disability is designed to keep you from going broke when you get sick, okay? So it pays a percentage of your actual pay, not the whole thing. They can't say if you get sick, you get paid 100%. So understand that you're going to receive a reduced amount. Usually it's about 60%. It can be a little higher, but usually it's about 60% of what you would have been making if you were working. So keep that in mind. And then there's a couple of terms that you may not understand until you know what you're digging into. And the first is an elimination period. So the elimination period is the amount of time that you have to be out of work before the policy kicks in. So you look for a long elimination period, meaning that you can be out of work for 30 days, 60 days, 90 days, or heck, let's go for a year. If you get something that's an elimination period of a year, that means that if you're out of work for 9 months, the insurance doesn't ever kick in. But if you're out of work for 13 months, then guess what? Your disability insurance starts to kick in. So elimination period is the first variable we can work with. And the second is the benefit period. And you can get one that pays for 5 years, 10 years, or even until 65. Let's talk about those for just a minute by an example. So let's say that all your ducks in a row, you've got this great emergency fund that covers most of your expenses for a while. You've got good short-term disability through work. You've got good health insurance, and everything's like it ought to be. You've got all this stuff in place. So you could go looking for a quote and say, you know what? I want a long-term disability plan with a 1-year elimination period and a until 65 benefit period. What that means is I want a plan that will pay me nothing until I've been out of work for a year, and it will pay me whatever percentage of my salary until I reach the age of 65. That's going to be a really cheap policy. Why? Because how many people do you know that get so ill that they cannot return back to work for more than a year? That's very uncommon. It happens, but it's very uncommon. So that elimination period, your emergency fund can go a long way here. All the things that you could do during that 1-year time period or however long that you can hold out, that's one really big variable. The other is, if you're going to be out of work for more than a year, chances are good you're going to be out of work for a really long time. So if you combine a long elimination period, you should probably also add to it a pretty long benefit period, because that's going to give you the balance that you can say, okay, if I can just hold on, if I'm not able to work for that year, then thereafter, then I'll be covered and all will be well. So I know that's a lot to sort of digest, and please forgive me for going through all 3 types of those pretty quickly, but understand that we're looking at the bare minimums. And if you don't have any of these, if you don't have life insurance, if you don't have health insurance, if you don't have long-term disability, then you are just begging to have a financial disaster. And that's why I talk about this before we get into the debt topic, because I want to make sure that you're where you ought to be with your finances. So you may have to watch this a couple times. You may have to go look at my book. You may have to go do some research. But here I want to give you a little bit of homework, okay? As always, I want to assign you some homework when I do these videos. So number 1, knowing that I've talked about those 3 kinds and knowing what your situation is, because I don't, but knowing what your situation is, are you overinsured now or are you underinsured? Do you have enough? So maybe you've got life insurance, but it's a $5,000 policy. Well, what's that going to do? That's going to get you in the ground and nothing else. Maybe you need more. Are you overinsured? Do you have a $15 million life insurance policy when you're only earning $30,000 a year because somebody decided to sell you some emotional thing? That happens, okay? So are you overinsured or are you underinsured? And then we need to think about that, what that means for you. So the second question I want you to answer is, why do you have the coverage you do? Why do you have the insurance you have today? Is it because, again, some insurance salesman gave you this emotional trip and you decided just to go along on the journey and you write that check and you're like, I'm good now, my family is cared for? You know, there's merit to having good insurance, but there's also the possibility of having too much. Or maybe you say, I don't need insurance, I'm going to live forever. And that's just foolish. So why do you have the insurance you have now? And then third, if you're underinsured, get quotes on upping that. Get quotes on getting more insurance. Look and see what makes sense for you. Have the conversation with somebody and just see what makes sense for you. If you're overinsured, see what you can cancel or see what you can reduce as far as your coverage goes. But back to my point, Are you overinsured or underinsured? Dig into the why that you're over or underinsured, and then take action. That's what those three things really get us to, because the goal of all of this is to be able to take action on our financial situation, right? Make sense? So I know I went through a lot. This was a hard video. As I was making my notes, I'm like, man, that's a ton of stuff, and it's not easy. I just went through a very high level. Please, please, please do some research for yourself. Understand this stuff before you make your step, because you literally are potentially taking a huge, huge benefit away from your family by not taking action on this, okay? Do the right thing for your financial situation. Do the right thing for your family. Do the right thing for yourself. So anyway, there's sort of my rundown of the three kinds of insurance that we need as our bare minimums. There are plenty of others, so decide for yourself what works. And if you have questions, shoot me a note, send me a private message, whatever works for you. I hope this has been a beneficial video. We're going to jump into a couple more topics next time that will probably make some better sense to you, talking all about how to get out of debt. That's where we're headed next. It's like really, really going to dive into how to get out of debt. And a lot of you are here just for that. So, looking for you in the next video. Until then, take care.